They bought 10 units of laptop, and each laptop costs 150,000 naira, and the total price is 1.5 million. That's when you multiply 150,000 naira by 10, you are going to get 1.5 million. Because they are buying, they are going to pay VAT. This VAT here they are buying is what we call input VAT. This is the input because they are buying. So the input VAT is 7.5% of what they bought, and that's 112,500 that they paid. So when they are paying this input VAT, they will keep the invoice. The law require them to have paid through a VAT invoice, because they will give them the invoice, they will pay. Now, however, on the second day they sold the same laptop, but did not sell everything. Out of 10 that they bought, they sold only 8, and they sold the laptop for 210,000. Now, the sales value of the 8, the sales value of the 8 laptop is 1,680,000. That is sales price multiplied by the quantity. That's 1,608,000. Don't forget that they bought 10, but they sold only 8. Then the VAT will be on the output. That is, look at my cursor, which is 0.75, that's 7.5 multiplied by the sales value. Okay, this is the output VAT. So this column here is the output VAT. This column here is the what? Input VAT. Now, you won't just say output VAT minus input VAT. So I'll put what we call output VAT here. Output VAT. Okay? So this is the output VAT. So you won't just say output minus what? Because there's closing inventory here. Closing inventory is 2. So the value of the closing inventory, you are going to calculate it. That is the 2 closing inventory multiplied by the price per unit. The price per unit here is 150,000 naira. This is the value of the closing inventory. Then you now calculate the VAT on the value of the closing inventory. The VAT on the value of the closing inventory. The VAT on the closing inventory, because you've not sold it, you cannot recover input VAT from that aspect. Now that's 22,500. So the net VAT position is the difference between output minus the difference between the input VAT and the closing inventory VAT. So meaning that the input VAT minus the closing VAT on the closing inventory. The answer you get, you subtract it from the output VAT. Okay, so you adjust your input VAT from the closing inventory. That means that you're going to reduce your input VAT by the closing inventory VAT. That is input VAT minus closing VAT on closing inventory. Then the difference in what you're going to pay will now be the output VAT minus the difference between the input VAT and the VAT on the closing inventory. And this is 36,000. 36,000 is what I'm going to give the government. And that's how you're going to do that month by month. Okay? And when your output VAT, when your input VAT is more than your output VAT, the law requires you to recover your money, and there was a dedicated budget based on the Finance Act of 2020 set aside for VAT recovery. And the same thing goes to the next month purchases of CPU. There's a quantity, they bought 5, unit price is 40,000, and they sold, the total unit cost is 200,000. The VAT on this cost is that's 7.5 times 200,000. They sold the CPU, they only sold 3 out of the 5. Then they sold it for 70,000. Total sales of 210,000. Now the VAT that's the output VAT is 15,750. So it's on this template, is in the template. Then the closing inventory is 2. Of course, you can see that out of the 5 that they bought, you can see that they sold 3. So they are left with 2. You value the closing inventory appropriately, okay, using the right valuation method. Now here we are using the quantity times the price per unit. Then we have the calculate the VAT on the closing inventory, adjust the closing inventory VAT from the input VAT, then find the difference between the input output VAT and the and your net result. You get this for all your goods. You are going to get this figure like this. Then you do your casting. You cast your what you're going to pay to the government, and this is what you pay monthly to the government. Okay, this is it. The Finance Act has kind of given proprietary right, I mean FIRS, the right to deploy technology to determine VAT when it comes to VAT, so that you even need to be doing this calculation. They'll just deduct it from your account immediately. Okay, but this is still being examined, but they are heading towards that direction. Okay, as you can see, that is what we have when it comes to trading company. It's a bit complex because it's a trading company, so you have to maintain your inventory properly, maintain your purchases properly, maintain your sales properly to manage your VAT payable and compare with the VAT paid to know if there's any outstanding VAT. For services they don't have input VAT because government assume that anything you are doing in service, you are making money from it. There's, when it comes to services, it's just intellectual, that is being deployed, your intellectual prowess. In that case, when you are doing services, what I always advise clients is you must separate your service fee from the item. For instance, if you are doing AC installation and your service fee for AC installation is 50,000 naira, but you need to buy this part, buy that part, buy this part, buy this part. Okay, it's good to separate your service fee from the AC, because the main thing coming to you is your service fee. So you can let them say, oh, buy all the parts, just give me the invoice for the service fee. Okay, so maybe because of they want to show more clarity, they put the service fee. All those ones, they are not they are not adding value with those things. Your value is coming when you're performing the service, and the value added tax should come on your service fee. Okay, so what if you lump everything together? Most likely you may pay a lot of money as your VAT, especially if let's assume that you are into you're into training, and you bought some books, educational material. I know that you also explain to them those books, so and the main facilitation fee is your service. And you bought this book, this Chinua Achebe book, different book that you know that those books are not vatable. Okay, and you lump everything together and you just charge VAT on everything. You are doing a disservice to yourself and if to that company, the company doing it. So it's good to separate, you know, your service fee from your main item. So, for instance, this is a human HR ABC HR services. They are into capacity building. That's human resources. Okay, so basically, this company now that's into human resources, what are they doing? They are doing capacity building. So what they will do